Good morning. Well, global equities fall sharply on coronavirus fears, with the Dow seeing its biggest loss in 2 years, while in Italy, one of the hardest hit nations outside of Asia, with 130 cases, saw its stock market have its biggest slide since 2016. And this sell-off comes as, don't forget, at the weekend, the IMF said that global growth would be 0.1% lower this year, taking global growth to 3.2% in the wake of the coronavirus. And the central bank also shaved down their 2020 forecast for China growth by 0.4%, estimating final growth will stand at 5.6%. It's still one of the strongest, one of the most bullish rates of growth around the globe, nevertheless, despite the downgrade. But despite that, we've seen money pour into safe havens like gold and bonds, which is why we saw the US 10-year bond yield fall to its lowest level since 2016. But we think we should see government intervention really step in following China's economic stimulus that we saw of late. That's why some analysts are now expecting the US Federal Reserve will cut rates. Yesterday, our market, calling out the figures, we closed 2.3% or 161 points lower, taking the market under the 7,000 point milestone for the first time in 3 weeks. And the futures are suggesting another round of profit taking today. The futures are suggesting a fall of 2.3% at the open. But do bear in mind, we heard from the world's best investor, Warren Buffett, at the weekend, and he said, in times like these, it's important not to sell down your holdings, as particularly those companies with strong and solid fundamentals should and will ride out the wave. And reporting season is also a time to see who's looking strong and who's not. We're hearing from a lot of companies today, including Appen with their calendar year net profit after tax. The market's looking for $65.1 million. We've got the stock as a buy. Caltex, Hub24 has just reported better than expected results on face value. QUBE, Spark also reporting. Taking a look at markets now, the Dow Jones was down. It's taking a heavy hit, as we mentioned earlier. The Nasdaq was down the most, 3.7% on Wall Street. In Europe, the German DAX was down the most, 4% among the majors, while the French CAC followed. The broader stock 600 down the least, 3.8%. In Asia, China's Shanghai Comp only fell slightly, 0.3%, holding on to those recent gains, and Hong Kong's Hang Seng lost almost 2%, while the Korean market fell about 4% as South Korea raised the coronavirus alert to its highest level. We saw gold meantime surge to its highest level since early 2013, hitting $1,659. Great news for our local gold producers today. Oil meantime has posted its worst day in a month, losing over 3%. It's now $51.48 a barrel, technically falling into bear market territory according to some. And the iron ore price is last traded at 86.42, while the Australian dollar holds 11-year lows, 66.04 US cents. Have a great day and happy trading.